So we move to chapter 2, materials, our first sort of technical chapter, as it were. Let's take a look at the first area, which concerns accounting for materials. Now, in terms of purchasing materials, think about a purchasing department. Really, in terms of the steps, there will be a series of steps that facilitate the purchase, i.e. the purchasing process. Now, you may find this a little bit long-winded, but it's important for us to get a good background, for example, on how a purchasing department works, because the examiner will set questions on or around these areas. So when we think about a computerized system, generally speaking, in terms of step 1, there'll be some form of request for materials from stores in the form of a purchase requisition. This is in effect, I guess, the document that requires the purchase and issued from the stores department. Second step, find the supplier. Now, obviously, we're simplifying things here. In terms of the department, clearly the purchasing department is responsible for finding the right suppliers, and it's highly likely, when I say simplistic, that they will have go-to suppliers. Once the supplier has been found, point number 3, order the goods. Again, the purchasing department, let's be clear on the terminology here. A purchase order will be issued from the purchasing department in respect of those materials. Point number 4, or step number 4, we receive the goods. Where do we receive them into? The warehouse. Now, key point here, goods are received. We have a goods received, most likely, note. Okay? So note that right-hand side here, invariably the documentation apart from step 2. So we've received the goods. So next, 5, pay for goods, the finance department on the back of an invoice. Now, more often than not, certainly in the receipt of goods, an invoice will probably come with the goods themselves, maybe electronically. But in essence, what we have here is some useful new terminology, and I draw your attention to the documentation in particular. What is a purchase order? What is a purchase requisition? What is a goods received note? The examiner will target this, and these are low-level, fairly straightforward questions for sure. Let's move on from there in terms of accounting entries. Now, certainly in my experience of teaching MA, double entry or debit and credit isn't at the top priority, but certainly an understanding of bookkeeping is. We're talking about simply the recording of transactions. So really, when we think about materials, we're talking about the recording effectively in the materials control account. And just to note, obviously, that when we talk about materials, we could be talking about a range of different things. Now, just referring back to the double entry, there's quite a lot of information here, and if you're weak on double entry, if you're not really overly sure about double entry, let's say that you haven't studied double entry or haven't studied FA, then I'd certainly go back to your double entry notes and just try and get a feel for this. I'll take you through it as best I can. Now, in terms of the key issues when we're accounting for materials, the first issue is really to make sure that inventory movements are reflected accurately in an accounting records, an organization accounting records. Now, that may seem simple enough, but when we see at the range and type of material, it makes it a little bit more complicated. Outside of that, certainly accounting will show the balance of inventory in whatever form that is, held by a company at a specific point in time. Now, in terms of the transactions, and this probably is the sort of most important section here, rather than the double entry, certainly in my opinion, when you look at the OT questions from the past, it's just an understanding of what's going on here is absolutely key to us, rather than necessarily debit and credit. So, when we think about the transaction of, let's say, purchases, basically the purchase is to the materials control account, which, if you will, is the master account. The debit is there to increase the expense. So let me just remind you at a basic level in terms of double entry. If we're trying to think of the debit and credit in relation to double entry, generally we debit assets and expenses to increase them, therefore credit to reduce them, and indeed credit income and liabilities to increase them, or debit them to reduce them. So this first entry is a purchase transaction. Purchases are an expense. So in essence, we have credited the bank or payables. When we say payables, we're talking about, let's say, a purchase on credit. So we're basically crediting here either the liability, to increase it, or the bank asset to reduce it, and increasing expenses or expenditure. Okay? Outside of that, when we issue to production direct material, we're talking about the debit to work in progress. So if we purchased material, we've received material in. And in effect, what we must do is bring that material from materials control, i.e. credit the expense, into what's called work in progress, because that material is about to be part of the production process. Outside of that, issues to production indirect. In other words, we're talking about indirect overhead in effect. So, what is the debit? Well, the debit must be to production overhead, because overhead is an expense of the business. Where will we credit? Again, materials control account, if you will, our master account. Fourth area, returns from production. What do we mean by that? Well, basically the reverse of what we've just had, some sort of return, perhaps a material faulty in some way, shape or form. The way that we would deal with that, clearly, is the reverse of how we dealt with this, i.e. that we credit work in progress and debit the material control, the reverse of this entry. What about returns to the supplier? Let's say it's a material that we didn't actually want or didn't actually order. Clearly, the reverse is true here. What we're doing is we're debiting liabilities or payables to reduce them and crediting material control. So in essence, what we've got here is a 5-part process that involves really a purchase of material for use in production and several transactions that involve really bringing that material into use, let's say in a manufacturing business, and the possibility of some of it being returned. Now, in terms of these double entries, for me, as I mentioned, I'm just not so sure that reflecting what we've just gone through here in terms of the double entries is overly important, because we have a summary here. And we don't tend to find questions that really focus in heavily on double entry within the MA exam. Not overly so, okay? So I'm going to leave that for the sake of speed and also because of my knowledge. I do want to focus just very briefly on the material control account. Now, let's be clear here. We've talked about bookkeeping. We've talked about double entry. We talked about debits and credits. This material control account is inextricably linked to, let's say, a manufacturing or production business. Now, in terms of what we're seeing here, if you're not familiar with double entry, we're seeing what we refer to as a T account. In other words, an account within the general ledger of a business. The general ledger of a business will have hundreds, maybe even thousands of accounts, stationery, plant and equipment, directors' wages, salaries, etc., etc., etc. A series of assets and indeed liability account, of which this is effectively this one, broadly an expense account. And what you'll see here is the entries that I referred to up top. Yeah, the work in progress control entry, the purchases, etc., where, for example, direct materials issued, indirect materials issued, materials returned to suppliers. So you'll see the debit and credit sides of what we referred to in the diagram above. But again, as I've said, in terms of real pure double entry knowledge, for me, we can pass this exam without it. I just don't think it's a very, very high priority for us. As long as we understand what the materials control account is for and are familiar with basic terminology, for example, purchases, work in progress, production overhead, etc.